Hello, I'm Shawnee's Teamer, Executive Director of the Lake County Chamber of Commerce. This year, as the COVID-19 pandemic took a serious effect on the health industry, it also laid some groundbreaking effects on businesses as well as personal finances. Never before have we received an extended deadline from April 15th to July 15th, and the extended effect on tax filings are set to linger over 3 years for some. From economic impact payments, also known as a stimulus package, to IRAs and 401ks, many taxpayers must address new avenues when filing their returns. Today we have with us Virginia Gibbs, owner of TaxLady1040, who has been working with clients in the tax industry for over 30 years. During this episode of COVID-19 Conversations from the Frontline, we will talk about some unique changes for tax filers and hopefully provide some additional assistance as we reach this upcoming deadline. Hello, Virginia. Thank you for joining us.
Thank you for having me.
So first question, with this year's deadline extended to July 15th, can those who need to still apply for an extension?
Yes, people can still apply for extension. The extension will take them through to October 15th, but that would only be an extension to file. So if you haven't been able to gather your records and things together, then you'll be able to extend the filing time, but not the paying time. You still would have to pay by April 15th to avoid any penalties and interest that would occur.
So what about extensions for estimated tax payments?
Estimated tax payments have been extended to June 15th, the April 15th, and the June 15th tax payments have been extended to estimated taxes till July 15th. And then you still have the September 15th and the January 15th tax payment. That is for federal only. The state of Illinois did not extend their estimated payments. So the first payment was actually due April 15th. The next payment would be June 15th, which already has passed. So the following payment would be in September. So if you haven't made the Illinois estimated payment, I would suggest you do that as soon as possible, because you've already missed 2 deadlines.
Now, is the stimulus taxable?
No, the stimulus was actually a tax credit that was created for tax year 2020. So it's a refundable credit, so refundable credits are not taxable.
Okay. So now we know that with many stimulus checks being distributed earlier this year, did filers have the option of adding this payment to their 2020 or 2021 taxes?
No, actually, they do not, because the IRS used either the 2018 or 2019 taxes that were filed.
Okay. So now we know that the federal government had at one point talked about redistributing stimulus checks. And I know that this past week, it was reported that almost 1.4 million in checks went to deceased people. And earlier this month, it was reported that 35 million in stimulus checks still have not even gone out. So if someone at this point has a balance that they're expecting that is still due, that they haven't received, how should they proceed?
They should go to irs.gov and click on Get My Economic Impact Payment.
Okay.
And that will walk them through if they're either in the queue or if they need more information, because some people have moved. So they might have to update it with their address. Maybe something went out through the postal service and they never received it.
Okay.
So that would be the first place to check.
Okay. Now, if someone has was required to file, but still has not filed their 2018 or 2019 taxes, can they still get a stimulus check?
Yes, the stimulus checks are going to be distributed throughout the year, so all the way through December of 2020.
Okay. So also, now we know that there were additional stimulus payments provided for dependents. Are there instances where people who did not get the full amount, what does it mean for them? What was the reason that they did not receive this?
Some people had a child in 2019 that wasn't on their 2018 tax return, so if they used the 2018 tax return, that child would be omitted from there. And some people had children in 2020, so since it's a 2020 credit, when they file 2020, they will actually get those credits. So they have not lost the credits.
Okay, now can the stimulus check be taken to pay taxes and other IRS taxes that are owed?
No, the IRS has said they will not take the stimulus check for taxes. However, If you owe back child support, that can be taken. And if the bank you're going to get your direct deposit into, if you owe them, they can also take it as your creditor.
Okay. Now, due to COVID-19 financial issues, many people have made the tough decision to take a withdrawal from their 401k or their IRA. Were there any penalties for doing this at this time?
No, for tax year 2020, there'll be no penalties for withdrawals. And also withdrawals have been moved from $50,000 to a maximum of $100,000 for this year.
Okay, so let's talk a little about, I'd say the seniors that are over 70 and a half. Is there any relief for those taxpayers over 70 and a half that were required to take a minimum distribution on their taxes?
Yes, there are no required minimum distributions for seniors that are 70 and a half. And actually, as the beginning of this year, it was extended to 72. So now you don't have to take a required minimum distribution unless you're 72 years old. But if you already had started at 70 and a half prior to year 2020, you still have to continue taking your minimum distributions.
Okay.
And also, as another form of tax relief, if you're a beneficiary of an IRA and you had to take required minimum distributions, you will not have to take those for tax year 2020. And if you've already taken your required minimum distribution, you have the option of repaying it all the way through August 31st of 2020.
Okay, that's a lot of good information. So we know at this time it has been very difficult for nonprofit organizations, and funding appeals have grown, widely since March. Has there been any filing changes for charitable deductions?
Yes, they added an above the line deduction of $300 per person. So that'd be $600 for married individuals. And you can take that whether you itemize or not.
Okay. So we know that even with the government providing the July 15th extension, did those that owe receive any level of extension on tax payments that were due?
No, you can't get an extension if you have a tax payment due. Only the extensions to file.
And no payment plans?
You can get a payment plan. You can get an installment agreement. There's offers and compromise. There's different payment plans that you can get.
That are available. Okay. Now, the latest PPP deadline we know was announced for June 30th with an expanded 5-year payback period. With business owners who have the opportunity to use any awarded dollars to pay back any other existing or short-term loans, can they do that with funds that they acquired recently?
The loans would have had to have been existing prior to the PPP loan disbursement.
Okay. So you can't use that one to those to pay the others, which I'm sure
Yes.
probably would have been helpful. Okay. So also now we know that the Lake County Board voted not to increase property taxes recently. What should homeowners be concerned about relative to Illinois property tax dollars?
For Illinois property tax dollars, what the Illinois is doing is they're auditing taxpayers for property taxes. So what you need to keep in mind is keep all of your receipts and proof of payment, because if you get a letter from Illinois Department of Revenue, that's what they would be looking for.
Okay. Now with all of the IRS changes this year, how would you summarize the status of the IRS correspondence at this time?
As of last week, there were still about 11 million pieces of unopened mail. And they're trying to get caught up, but it's going to be a long process because they were closed down for about 3 months. Nobody was there to get the mail, so mail was piling up. So you just have to be patient with the IRS and allow them time, especially if you're doing amendments or sending other correspondence in.
Okay. So now regarding IRA contributions, are there benefits for making contributions at this time? And what are the associated deadlines with the extension relative to contributions for 2019 or 2020?
Right now, you can still make contributions for 2019, and that's all the way through July 15th, which is the deadline that has been extended, or you can choose to do 2020. It'd probably be more beneficial, especially if you're economically impacted, to do 2019.
Okay. So with taxpayers working from home And we know this is a large issue here and this is probably going to happen a little bit more because a lot of people are going back to work. But we know that with taxpayers that have been working from home or experiencing temporary unemployment, is there any relief in regards to flexible spending accounts for dependent care or health spending accounts?
Yes, there's a few options that taxpayers have, and that's dependent upon their employer as well. The employer would have to update the plan, but they can either opt out of the insurance and get a cheaper insurance on their employer's plan. They can go over to their spouse's insurance or another insurance plan. As far as dependent care, a lot of people have been working from home, so they didn't need dependent care. They can actually stop those dollars or decrease the dollars that are coming out for dependent care. So that way they won't get hit with taxes on the unused portions next year.
Okay. So Virginia, as I mentioned at the opening of the program, I mentioned that some of these tax changes are going to be affecting people probably for the next 3 years or more. I know even with the PPP, they indicated, I mean, that's as far as a loan, they're getting loans that are going out for 5 years. But what are the other, when you talk about the long-term effects of COVID-19, the 3 years, is that really reflected just the people that have um, IRS payments that are still due? But how long is this going to take us to get through this period of COVID-19 affected taxes, would you say?
Well, for the IRA specifically, it could be 3 years because you can choose to pay taxes on the whole amount now. You can choose to pay taxes over the next 3 years, or you can replace the money over the next 3 years. So you have several options.
Okay, is that the same for the 401ks?
Yes.
Okay, okay. So having and I know the initial deadline this year was April 15th, and a lot of people are now, we're still having this conversation into June. You're still having a lot of clients coming in relative to the July 15th deadline, still pretty busy?
I'm still pretty busy. I'm getting calls on a daily basis.
Pretty busy. Okay, so with the deadline in a couple of weeks, any other major comments or concerns you think that people should be thinking about as far as filing? I guess a lot of people with the July 15th, um, when you file this much later, is it going to be later to get returns, or people still mailing? Would you recommend that they not mail in simply because of all the correspondence and the slowdown with the IRS at this time?
I would recommend that they don't mail their return if they don't have to, because if they mail it in, they're going to take care of the backlog of returns before they get to the new return. So you don't know when you'll be able to get the refund. Could be, 3 or 4 months or more. So I
Okay.
would recommend mailing the return. And if you do have to do a 2019 amendment, the IRS is giving us a break with the 2019 amendments by allowing those to be electronically filed later this summer. They have not come out with the date yet. So
Okay.
I would hold that amendment and not mail it until the IRS opens up e-file for 2019.
Okay.
Another thing that would be concerning with if you have not filed your 2016 tax return, you need to file that because that deadline has also been moved to July 15th. After July 15th, then you will lose any refund that you would have coming to you.
Okay, so generally people, what you're saying, people have the 4 to 5 years to actually file anyway. So that's why it's
Three
always
years,
going back to 16
yes, 3 years from the filing date.
from the filing date. Okay, so that's really good to know, and I'm sure a lot of people that are in the midst of all of this are probably thinking all about all the other issues relative to unemployment, employment, going back to work, and figuring out the taxes. So it's great that they gave this extended deadline. Have you found that there have been any differences relative to operating as far as filing from the state level as opposed to federal? Still response time still pretty much the same? Because generally tax returns were even mailed, it was 4 to 6 weeks. So you're saying that's pretty much going to double or triple?
It could possibly. It all depends. Everybody still is not back from the IRS to work yet. So it just depends on which division it's going to, how many employees they have there.
Okay. So with the number of clients that you have, are there any other specific topics that have come up or issues that you see that taxpayers need to think about relative to getting this everything in by the 15th? Because I'm sure it's going to be just like April 15th, hitting that button at the end of the day and getting everything in. But anything else you think they should be aware of that might have changed this year relative to filing or relative to COVID-19, or anything that they should think of relative to next year? Sometimes when there's changes, you have to really make a documentation for the following year so you can keep things in order. Anything you've seen with your clients that you want to kind of alert people about at this time?
With people that have lost their jobs and been economically impacted, what I would suggest, if they do have a spouse that's still working, maybe they can make some adjustments on their W-4 form to have less taxes taken out so they can use the money now rather than getting a refund and wait until 2020.
So that sounds like a really good tip. I'm sure people will probably hold on to that one. Okay, now Virginia, I want to go back to the PPP loan. With a number of people that have applied for that, how is that going to affect their taxes?
Well, they're going to actually have to pay back the money within the 24-month period if they acquired the loan prior to June 5th. Those that acquired June 5th or later are the ones that have been extended to the 5 years. So they need to plan to make those payments.
Okay, and I
They
think
may want to, they may want to also get with their tax advisor or financial advisor to talk about the forgiveness portion of that, because if you don't have the right paperwork and the right documentation, you might have to pay 100% of the loan back.
okay, and that's a very serious issue. And I know they've been talking about the forgivable portion of that, so I'm sure that's very helpful for a lot. So once again, I'd like to thank you for being on the program today. If there's anything else you want to round up to help people out relative to taxes, I'd like to open the floor to you if there's anything else we haven't covered.
I would just say, get your taxes in as soon as you can, because there's going to be a mad rush to the finish line. So everybody can't be there at the same time.
That is absolutely true. So
But
thank
thank you for having me.
Oh, yes, absolutely. And thank you for sharing this valuable information. For those who are joining us, once again, Virginia Gibbs, owner of TaxLady1040. Information regarding her business will be noted at the end of this program. And also, as a member of the Chamber, you can go to www.lakecountychamber.com to connect with her as well. Thank you again for joining us. Have a good day.
Thank you.